When there's a big overreaction in the markets, it can be a great time to buy a beaten down stock. And the stock I'm going to talk about today may just be one of the best deals out there right now. This is not financial advice, and I'm not suggesting that this stock is going to be a sure thing, but it's one I'm looking at buying in the next few days. The stock I'm talking about is Viking Therapeutics. Shares of Viking crashed an incredible 42% on Tuesday. It's a massive single day drop. That doesn't quite put it back to its 52-week low, but it could end up getting there. For biotech, a drop like this usually means one thing: news from a clinical study came out. And that's exactly what happened with Viking. If you're not familiar with Viking, it doesn't have any approved products just yet, but it has multiple trials ongoing related to obesity and MASH, which is a liver disease that involves a buildup of fat. The company is in the middle of phase 3 trials for an injectable version of VK2735, which is a GLP-1 treatment that's pretty far along, and it could obtain approval soon. If approved, it could rival other treatments that are already approved from Eli Lilly and Novo Nordisk. But it wasn't trial data from that treatment that sent the stock into a freefall. Instead, it was the pill version of VK2735. It's a daily pill, and over a 13-week trial, people lost up to 12.2% of their body weight. That compares favorably to Eli Lilly's weight loss pill, where people lost on average 12.4%, but that was over a 72-week period. That wasn't the bad news at all. The big concern was related to side effects. The discontinuation rate for Viking's drug at the 13-week mark was 28%. And analysts noted that for Eli Lilly's pill, the rate was around 24%, but that was over a much longer time frame. Thus, they concluded that from this, Eli Lilly's pill must be much better tolerated. And so the concern is that Viking's pill may not be a serious contender to be a top GLP-1 drug in the future. But I think that's a gross overreaction. The discontinuation rate doesn't necessarily mean the drug isn't safe. After all, the overall discontinuation rate of people on the placebo was 18%. In the Eli Lilly trial, the discontinuation rate for the placebo was about 30%. It may have more to do with people not seeing the desired results, or perhaps not wanting to stick to it all that long. Regardless, it's not a clear sign that there's a problem with the drug, or the side effects are so concerning. The big thing is that there weren't actually any serious or concerning issues that resulted in Viking abandoning its pill. Pfizer, for instance, abandoned its weight loss pill earlier this year after it appeared to cause liver injury in a patient. That's a justifiable reason to be worried. That was a serious adverse effect. A high discontinuation rate, however, doesn't necessarily mean people won't take the treatment, especially if they know the weight loss will be significant. What I find interesting and rather convenient here is that while the analysts try to beat down Viking and say that the pill must be doomed because of the side effects, since a high discontinuation rate in a short study must be much, much worse than a slightly lower discontinuation rate with Lilly under a longer study, but there's no focus on the fact that Viking's pill achieved almost identical weight loss to Lilly's despite being much shorter in duration. It's pretty convenient cherry picking by analysts. Lilly is a big favorite for institutional investors, and Jim Cramer is always busy pumping it up on Mad Money, even when people call about other healthcare stocks. And I just can't help but notice the bias, focusing on the treatment duration when looking at the side effects, but not the weight loss. A 40% drop on this kind of news is incredible, and I just think it's totally undeserving. Viking did not abandon this drug. In fact, it met both primary and secondary endpoints, and the adverse events from taking it were either mild or moderate. Plus, to crush Viking stock on this news would also be to completely ignore the fact that it still has the injectable treatment, which is in phase 3 trials. And if that data comes back strong, it could obtain approval, and that could mean millions and billions in revenue. In phase 2 trials, that drug helped people lose around 15% of their body weight. If the treatment gets the green light, it could lead to a ton of revenue for Viking. Plus, it could make Viking a really hot acquisition target, especially for a big pharma company like Pfizer, which recently failed with its weight loss drug. Consider that UK-based AstraZeneca in 2023 agreed to a deal where it may pay up to $2 billion to a Chinese company just to gain the rights to its GLP-1 drug, which is still in trials. Now imagine if Viking gets an approved GLP-1 drug across the finish line. Surely it would be worth a heck of a lot more than just $2 billion. And Viking's market cap after this recent sell is around $2.7 billion. I'm contemplating putting in a limit order at just under $20 to see if it falls that low, because I think this is a stock that could have a ton of upside after such an overreaction. In the biotech world, all it takes is a big hit or miss on a clinical trial that can send a stock soaring or crashing. Right now, Viking's crashing, but if you can stomach the risk, I think this could be an underrated buy and have a lot of room to rise higher. So, what do you think about Viking stock? Am I wrong? Am I right? Do you think it's a good buy? Let me know what you think in the comments. Thanks for watching, and please leave a like and subscribe for more content.